What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with the overall market, what you should be watching for as time progresses. I'm also going to break down some very important factors affecting the markets and what you should be watching for as time progresses. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just 4 days from now, so check it out before they run out. Anyways, let's break down what's going on with the market. SPY was down 0.45% for the day, despite the fact that it tried to gap up and push up. The market is still looking weaker. Unfortunately, the market has not bottomed just yet and is continuing to make lower highs and lower lows. Now, despite this, I still believe that the market's going to bottom very, very soon, and we're going to see a very, very big surprise because everyone's expecting some kind of crash. But right now, I don't want to talk about some big rally just yet. I think it may take many, many days to develop, if not another week or so. But for now, right now, at the time I'm recording this, the market is still looking weak and there is a risk of more downside. So it's very important to be prepared for more downside to come before we end up getting that bounce, and why that's likely going to be the case. So the market is extremely fearful. Typically, when the market hits these extreme fear levels, we tend to see the market remain weak for some time before the market starts to flip. But extreme fear tends to mark the bottom for the market or very, very big bounces to come. So I think the market may have a little bit more left for the downside before we start to see buyers stepping in again. But we're going to need some kind of catalyst for some much larger bounce to happen, especially in November. And one catalyst that could help the market would be possibly on November 1st, as we have the FOMC meeting. Whatever Jerome Powell and the Fed ends up saying, that's going to have a big effect on the markets. The market is expecting a Fed pause or maybe a skip, whichever one you want to go with. Going into the next FOMC meeting. So this could be very big for the stock market. And Jerome Powell, his words will have a big effect on how the market moves. So we're going to be watching this very, very carefully. Don't forget that the end of the year is coming, and many of those Wall Street investors, many of those big institutions and hedge funds, they want a good year, or at least a decent year. So this is going to be their opportunity to try to make some kind of catalyst happen to push the market back up. So we're going to have to wait and see if that ends up happening. But that's going to be many, many days away. For now, let's talk about Monday and Tuesday. There's not a whole lot of data coming out. We have some manufacturing data for Monday, but the current charts are still looking weak as we're on this strong downtrend. SPY is making lower highs and lower lows. And when we zoom in, looking at the 5 minutes time frame, you're going to see that the market is still looking quite weak. And we have some new important levels. So there's a gap on SPY that's unfilled. And if we do continue to sink, we could see that gap get filled. Right now, we're watching support. We're going to be watching support around 410. If we lose it going into Monday or Tuesday, the next level is going to be 409. If we lose that, 408 has some support, but it's not that strong. There's going to be 406.5, then 405 and 404 below that to fill our gap on the daily chart. So where's the gap? Basically, let me just close this for a second. Looking at the daily like this, you will see that we technically do have a gap down here. It's way down here at this 404 area. Right about here. So we could see this gap get filled here. There are technically more gaps below, but those don't all have to get filled, at least as of right now. And I still believe that there is potential for this market to do something that's super ironic and unexpected because of other technical indicators. So could we drop more? Yes, we could. We could see SPY come down to 405 or 404 to fill its gap down below. Do I think the market could bounce in November? I lean in that direction. Yes, I think there's going to be a big bounce when people least expect it, but we're not ready to bounce yet, so there could still be more downside. Don't forget that the McCullen Summation Index is still giving us that same report right now, because this tends to hit these extreme fear levels when the market's going to bottom. This happened in October, and then the market bottomed and bounced. That was October of 2022. This also happened in March of this year before the market bounced, and now it's happening right now as we're hitting some extreme levels. There could be more downside, yes, but the market is due for it, and things could change big time. The puts and call options are in fear mode as we're seeing more sellers stepping in, more puts being bought. And that's what tends to happen when this market is getting ready for something very big. But for now, there could be more downside, so let's not worry about the bounce yet. Let's just wait and see where SPY bottoms and how SPY reacts to like 408 and 405 if it comes over the next couple of days. Now for Tesla, we did close green, but Tesla's looking a little weaker. We have this possible head and shoulders like pattern that's developing, which could drag Tesla down towards 203 all over again. And we'll see if Tesla breaks below 200 or not. If we hold above it by the time the market bottoms, that's going to be a good sign if we hold it. If we lose it, then Tesla's going to start sinking into the 190s and start filling some of the gaps down towards like 193 and etc. So you want to be very careful. There is still going to be some downside for Tesla likely, but let's see how it tries to hold above 200. For Aapl, it's kind of mixed. It might just trade sideways for now. We could see a little downside looking at this current head and shoulders like pattern. But don't forget that we have earnings coming out for the week for Aapl going into like Thursday. So that's going to be very important. We'll see what happens to Aapl then. There's not really much else coming out beforehand. For the QQQ with the markets, we could see a little bit more downside. There is a possibility of us getting down towards the very low 340s, if not around 342 all over again. And if we lose the 340s on the table and there's an unfilled gap very close to the mid 330s that could get filled, but that's going to depend on if we break 340 or not. But there is a risk of more downside looking at the current technicals. Don't forget that the 4-hour is a very big determiner of how this thing is moving. Now the 4-hour is trying to like curl right here, so we'll see if we get some kind of crossover or not. But it looks like it may get a back test of this 342 to 344 zone before we see an attempts to bounce. But if it loses those supports, we could still sink. So don't really like turn way too bullish yet. Just be prepared for this. On Nvda is on a downtrend. It's been making lower highs and lower lows. It's trading kind of flat right now, trying to hold above 400, but we're going to be watching this test next week. Do we hold 400? If we fell at 400, we could fill the gap all the way down to the mid 390s. If that's the case, Nvda could see a little bit more downside, but I think Nvda is going to try to bounce with the market later on in November. So I'm still leaning in the same direction, guys. I'm not really changing my view. The only thing that's changed is where the market's going to bottom. It's going to drop a little bit lower than I was expecting, but hey, it happens. So we're just going to be reading the trends and waiting for that change. The VIX has been continuing to uptrend. We'll see if this thing gets a rejection. But for now, just watch these levels and just be as calm, cool, and collected as possible in a market like this. This week was very rough for a lot of investors, right? Things like this happen. It's okay. It's a part of trading, but we're going to improve. We're going to do much better next week, and we're going to learn from our mistakes. So I would recommend going back on the drawing board, look at any mistakes you may have made, and don't give up, guys. Remain calm, cool, and collected at all times. Don't let the market get the best of you. Manage risks accordingly, and do not let negativity get the best of you. It's very important to avoid negativity. It's very important to avoid letting your emotions control you. All right. Trading could be very difficult during months like this, but it's best to keep your calm and to never, ever settle for less, because we are not here just to survive and barely make it by. We want to thrive. And for us to get there, it's going to be difficult, but that's just another motivator to improve. You don't want to be making the same mistakes twice. You want to keep learning from the mistakes you've made in the past. So don't forget to review, practice discipline. Discipline is key to trading success, and never ever settle for less, guys. That's my message for the rest of the day. So have a great day. Remain calm, cool, and collected. Enjoy the weekend, and I'll see you guys in the next one. Thanks again, and peace out.